Joint MD at Prabhudas, Lilladher is now with us. Amisha, what would you like to start with? Corporate banks like Axis or ICICI, or Jubilant Food, Dabur, or maybe Imami that we are talking about? So you can start with whatever you want, but these are the two sectors or companies that we would want to focus on.
So definitely, I think the theme of the year, as we all probably believed, is going to be corporate banks. And not only because the credit growth will be phenomenal or the capex cycle has revived in India. It's largely because the pain that they were going through seems to be at the peak. And now this quarter also bore the results that yes, in terms of fresh slippage, it's one of the lowest in almost 13 quarters or so. And also the recoveries apart from NCLT solution in some of the large cases, which is telling us that the provision part will substantially start coming down. That coupled with the fact that both these banks, Axis and ICICI, have reasonably very good liability franchise, and the cost of incremental deposits being reasonably much better than the two suffering other sectors or the competitors, I think says that these over the next 6 months, 2 years and 3 years will be on a good recovery path. And as both the new managements have been stating that by 21 they have 15% plus kind of ROE target, that will bring them back to their respectable price to book multiples. So we continue to remain extremely positive on ICICI Bank. I'm sure because of some of the problems of the past, there are some volatilities that we are seeing in the short term in the stock, but both would be on recovery. And because ICICI Bank has all the valuable subsidiaries which will also over the period of investments will grow at a reasonable CAGR, I think that is much larger embedded value in ICICI, though in short term because of the other problems not being faced, Axis will do much better.
All right, that's the view coming in on some of the corporate private banks. In fact, just let's take a look as to the momentum that's building up in the broader end of the market. As we said, you can't really compare it to the frontliners, but nonetheless, you are seeing a 110-point bump up in the mid-cap index. Venki's India is soaring. Avanti Feeds is having a terrific run. EIH on the back of numbers. Investors clearly giving that one a thumbs up. So that stock is up 13%. Kaplan Point, Indian Hotels is also soaring in trade. Something like Hexaware after the quarter now gone by. Blue Dart as well is in the green, reacting to earnings. Wanted to get in a view then, Amisha, as to in terms of the individual result candidates. You had Bajaj Auto, which came out with its numbers today. Hero MotoCorp. We're expecting the commodity inflation, the adverse currency, the higher discounts, all of that could perhaps dent the margin picture. What are you expecting, and how have you read into the auto sales numbers so far, earnings?
So I think the auto sales number was slowing down during festive season and after that, and dealer inventories were going higher across all categories, be it two-wheelers, be it passenger vehicles. It was pretty evident. So the results are bound to be, apart from slower inventory clearance and the commodity pressures, going to see the impact of little discounts and all that also. And I think even right now, as we see, the ground reality has not changed much. So even the fourth quarter could be very sluggish is what the current indication is. And I think with that, only problem which has been sorted out is the extreme commodity inflation that they were facing. To a great extent, that has sobered down, and the rupee depreciation issue or the currency issue is sobered down. But the demand side is still, I think, very sober to weak.
All right, that's the...
So I think not just based on the current results, but overall Tech Mahindra, particularly because of the telecom 5G expense which is likely to come, I think will have a slightly better traction in terms of both top line and margin. So that could be one of the interesting bets. Apart from the fact that a lot of current rally is also due to both the buyback as well as a defensive kind of a play which investors are looking at. But my belief is that the inflation being so low, over next 6 months, we can definitely expect rate cuts in India. And yesterday, Fed having also sobered down hugely their comment, the rate sensitive will play a much bigger role, or so to say cyclical, will be a better place to be in for capital appreciation.
Last we spoke, in Diwali, and you mentioned that you're not very optimistic on market. In fact, you were anticipating some downside. Market is still there. We haven't seen any major upside. Now we are in middle of earnings season. One cannot decisively say that earnings season has been great, and neither one can say that it has been disappointing. Is there any change in stance when it comes to market, Amisha? Are you still, a bit cautious on market?
So there are two things here. From a very macro perspective, I feel that a lot of money went out of emerging markets, and of course from India. Last year almost, as we all know, close to 1 lakh crore debt plus equity went out. And this year I expect that that trend will not continue, and we will have some allocations from the global perspective, both because of the slowing rate hikes in US, and because of which the dollar strength will, I think, be a little more muted this year. Having said that, our own challenges are something which I am finding a bit difficult to fathom. Frankly, the kind of auto sales slowdown which we are seeing is very difficult to digest. One of the reasons could be, of course, the NBFC issue, but the other aspects are very difficult to make out, and which is keeping me a little more cautious. But overall, if you see, most likely market will be a tale of two halves, but overall I am more constructive on market in 2019 as compared to 2018.
Well, that's certainly music to ears, because you have been cautious, and now a tale of two halves, and I know which half you are anticipating a decent upside. Maybe it would be second half, Amisha, once the clarity on the government emerges, and things start flowing and capex starts increasing. So a mildly positive stance, especially from liquidity flow perspective from Amisha Vora. Amisha, stay with sectors apart from banking and IT which you feel can turn the tide for market.
So banking and finance has itself a reasonably large weightage in the Nifty, and there the delta in terms of profits will be really huge, because both all the three large corporate facing banks can put up if they put up the show as expected, the delta could be 30 to 35,000 crores plus of profits. The delta, I'm not talking about absolute profits. So of course, that being one pace which was hurting the overall Nifty profits, can bounce back. The second place, I would say, is going to be stocks like mostly Reliance, which is into its own space in terms of maybe deleveraging, maybe demerging and trying to create value. So some of those actions can also lead to some strength and support the overall Nifty performance. But I also believe that if the one or two rate cuts seep in the economy, and by that time, in one way or other, the lending pace would have come back into the economy, which is hurting for the last 1 quarter, then this very sluggishness, a lot of sluggishness in auto side also can start receding, and then that can also participate. So I am more focused, of course, on domestic consumption, but vary a bit about very high valuations where everyone has taken a lot of shield, and I would rather take a slightly more medium-term approach and go where the correction is set in and take a 2 to 3 quarters or a 4 quarters kind of a view that it will start recovering.
Definitely banks, auto might make a comeback. And Amisha, we all are always short of words when talking about Reliance performance. So thank you so much for joining us and sharing your insight on markets and a host of ideas which we discussed with you. Pleasure having you. Let's move on with